The following is a presentation of TFNN. The Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All righty, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. Coming to you live at Tiger TV at TFNN, also at TFNN.mobi on your mobile phone, and live inside the e-Signal platform for you. All right, so we got a variety of news reports that we want to go over today. We also want to catch up on where the market's at. And let me pull up our news list for the upcoming week, and we'll get your news plan in place. And we might scan some charts, see if we can possibly find some trading opportunities along the way. But let's see here. Let's go ahead and pull up the news trading plan, and then we'll also get your lunchtime market update as well. Looking right now for the upcoming week. Just give me 1 second, and I'll have that up for you. Here we go. All right. So today, obviously, we have a holiday, and I want to say thank you to all of our veterans out there who have served our country. Thank you very much for everything you've done and what you've helped make possible and continue to make possible here in this country, in the United States. And so banks are closed today. That, of course, makes things a little bit more interesting with the markets, but there's still plenty of opportunities. We've had a lot of movement today. Just looking over at a couple charts, you got the Russell having some great movement. You got the S&P flew down, pulling back up. Right now, bouncing right off a settlement, so might be setting up for a short right now, potentially. Let's see if it continues to climb, if it can break through settlement, if it's going to go ahead and just basically had a little pullback on that. This might pull on back down. Back to the point of control here, and would target right around 2070. So 2070.25, right around that point would be my initial target right there for short if we get a little confirmation to the downside on the S&P. Looking on over at a couple other charts, NASDAQ, after a massive run-up, is starting to show a little bit of downside pressure. And it flew quite a bit above the ICE magnet level for today. Also went above settlement. Yeah, I'm sure it's going to pull on back down. That first struggle area is going to be right there around that ICE. I think it'll hit settlement, probably pop right through it, come on back down to 46.40. So, again, waiting on confirmation before taking any trades on that. But those are the current setups. Russell moving on back down. And that catches us up. Let's see. Gold. Gold is pretty interesting today. Just sort of chopping around, not doing a whole lot of useful market action right there. So not a whole lot to, pay attention to at the moment on the gold markets. Let's see what else we have coming up this week. We got, in addition, I'll go ahead and let me flip over some charts. Like I said, I'm not taking those shorts yet. I'm waiting for some confirmation on them before we just hop in and grab them. And NASDAQ is my favorite one I'm looking at right now for a potential short setup, along with the S&P. So I'll keep those on the side there. We'll see if we get a good setup in the process here, and may miss it, may not. We'll see if we get it. Okay, so that just gives you a couple possibilities to just keep your eyelids open and checking those out. All right, so like I said, we have today's holiday. With Veterans Day, Canada has a holiday. France has a holiday as well. So all of them having their holiday today, and so that obviously has a little bit of impact on liquidity. Draghi was speaking this morning. We have the Aussie employment change tonight. That's the one news trade we have on the list for this evening. And just to go over that with you, it's going to be Aussie's employment change unemployment rate. This is their NFP. Okay. It should be coming out at 7:30. And the typical setup is about a 35-pip move off that report. So we'd be looking at an entry sometime around 6 o'clock for an 11 p.m. expiration. And we'd be looking for an iron condor trade on that, which is where we're buying the lower spread and selling the upper spread, trying to collect premium in between there, looking for $35. A minimum profit, which is basically adding the two max profits together, should equal at least $35. And that's, the benefit of getting in at 6 is, again, that's the range, 35 pips from 6 to 11, and it gets you 4 hours for potential premium to potentially get that trade on. Doesn't mean the trade's always going to be there. Doesn't mean that there's going to be enough premium in it. There may be a really small amount. Maybe it'll be a straddle, or there could be a ton. But what it does mean is you have a knowledge and expectation on what the normal, like 10 out of 12 times that report comes out, what is the movement like, and you can use that, as an edge, and you also just be aware of it. Let's see here. Going on in and looking, what else do we have? Yen is going to have some reports coming out at 6:50. So they got their machinery orders coming on out over in Japan. Aussie will also have inflation expectations come out at 7. Again, not really a big event, just one of those things to be aware of. And that comes out 30 minutes before their employment. Tomorrow morning, Draghi is going to be talking. So let's look at that and see what exactly is on the list for tomorrow morning. Like, where is he speaking? What is it about? And he has a couple speeches. He has one at 3:30. He has another one at 5:30. Who is Draghi? If you don't know, President Draghi is of the ECB. It's sort of like our FMC. And FOMC, and he's over the the pumping of the money over there in Europe. He's testifying on monetary policy in front of the Monetary Affairs in Brussels. So that could definitely cause some volatility as questions are asked. And then he's going to speak again at 5:30, speaking about his capacity as chairman of the European System Risk Board at the European Parliament in Brussels. So a lot of Q&A going on and speeches, and I'm sure a lot of, hey, we're going to pump, print money at Europe. That's going to make the euro weaker, going to make the dollar stronger with the outlook of raising the interest rate on the FOMC. So expect that to have an impact. And then, of course, Yellen, not to be outdone, wants to go ahead and have a little speech. She's going to have one at 9:30. And she's going to be delivering opening remarks at a conference on monetary policy implementation in the post-crisis period, because the crisis is now over. We're now in the post-crisis period, and that's what she'll be speaking on. And again, she'll be talking about, of course, the road to raising interest rates again in a healthy economy, and and how to be careful about that. And anyways, all that combined should give us some nice volatility, I'm hoping. Tomorrow morning, we had to see that in the European session. Hopefully that'll spill on over. And we got a couple other FOMC members speaking. It just seems to be a big FOMC member speech day. FOMC member Evans is going to be talking at 10:15. Let's see. We got FOMC member Dudley is speaking at 12:15. FOMC member Fisher is speaking at 6 o'clock. So a lot of Fed heads are going to be out there talking, giving their 2 cents. I know they just decided a new Fed head. He's the head of Goldman. He's one of the guy that was over the TARP funds. He's going to be taking over in January as one of the seats. Another Goldman, guy on the crew. And so all that's coming out. So just be aware, a lot of Fed talking tomorrow. And I'm hoping that they'll stir some stuff up and give us some nice volatility. But we've had some good smooth trends. There's been some flat periods, but overall we've had some good smooth trends, especially on the indices. And Nasdaq's still rising right now, so it's not giving up yet. And along with the S&P is just now. S&P is hitting settlement right now. All right, so let's go over what else do we got tomorrow morning. I already talked about all the FOMC speeches. We also got Canadian Governor Council member. He's going to be speaking. Wilkins will be speaking, and there's also a NPC member speaking. So over in Britain. So like I said, just a lot of Fed heads across the world decided they went to Canada, Europe, U.S., Britain, all doing little speeches. So maybe as all that combines together, it'll give us some volatility. Going on in, we got the U.S. unemployment claims coming out at 8:30. That's a pretty normal thing. A little more impact than normal because of the FOMC thinking that they may be raising rates in December. So a lot of algorithms are going to be paying a lot more attention to those unemployment numbers. So just be aware that it may have a little more impact than normal. Usually it's a pretty flat event, but it may have a little bit more. We have the U.S. JOLTS job openings report coming out tomorrow. Not a big thing, but it does come out at 10 a.m. One thing that's very important, we have the weekly natural gas inventory report coming out. And, if inventory is high, it usually goes up. If it's low, it goes down. Inventories have been really high above historic levels, especially on oil. And we had oil come out today right here. Got crude oil inventories. And if we go in and and look at that. The biggest thing over the, let's see, U.S. crude oil imports averaged 6.9 million barrels per day. Last week, down by 89,000 barrels from the previous week. Over the last 4 weeks, crude oil import averaged 7.2 million barrels per day, and below the same 4-week period. If we go on down to the big number, the 2.8 million number, the commercial crude oil inventories increased by 2.8 million barrels from the previous week, so continuing to rise. Now at 482.8 million barrels of crude oil in inventory, not including the Strategic Petroleum Reserve, which is more on top of that. And again, still had the same key statement. U.S. crude oil inventories remain near levels not seen this time of year for the last 80 years, further driving down oil and gas prices. Let's see here. Let's go on in, keep diving in. That gives us a lot of volatility with these reports coming out each week on oil. So that's one thing you may want to check out if, gold isn't your thing right now. Usually like either gold or oil, sometimes both. And I'll be, often following one of the two. Let's see. What else do we have going on? We already talked about all the members. We got the Frank PPI coming on out. That gives us a trade for tomorrow evening at 3:15. Okay, 3:15 a.m. is when the report's going to come out. So this is one of those you can put it on at night at 11 p.m. for a 7 a.m. expiration. Again, an Iron Condor looking for a $35 minimum profit on that trade, and trading the dollar Frank on the Frank PPI news. So giving you a nice little setup right there. And we also have another setup on the euro for tomorrow evening. The Euro Flash GDP and trade balance news reports coming out at 5 a.m. And that's going to give us an entry at 11 p.m. for a 7 a.m. expiration on the euro dollar on Nadex, using the Iron Condors over there for a $35 minimum profit that we'll be looking for on that trade. Let's see. We'll go on into Friday. We got Euro German preliminary GDP coming out. That's pretty significant, but not consistent enough to trade the news on. We have a variety of U.S. reports coming out at 10 a.m. With the University of Michigan consumer sentiment, inflation expectations, and business inventories. Those, again, don't have a consistent impact on the market, but they are ones that, you do want to keep your eye on there. And the one other Iron Condor we have for this week will be coming out on Friday, 7 a.m. to 9 a.m. And again, entering at 7 for a 9 a.m. expiration, $35 minimum profit that we'll be looking at on that trade. And again, looking at that for euro dollar, and that's on the core retail sales, PPI, and core PPI. That reports will be coming out. You don't have to know all about all these reports. You don't have to know about the outcomes. You don't have to know about what they mean. What you need to know is what impact do they have on the market, on the chart that you're trading. That's what's important. And so what I do is I go back and I collect the stats over the last 1, 2, and 5 years to find out what the movement is on each news report, so that way we can put together a trading plan on how to best take care of it and how to be aware of it. Stay right there. We'll be right back after this break.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. Just getting you caught up on the news reports for the upcoming week and next week here. And like I said, we're just walking through step by step. We got current week covered. And let's see what else we might need. I think that ought to keep pretty busy. We can check out next week's, tomorrow on the Diagnostic Trading Hour. We'll go in, we'll dive a little bit deeper and see what we can get done for you. So what else do we got going on right now? Let's get you caught up on one-time market wraps. We can go through that. First, let's talk about some of today's news and what are some of the top headline stories. We got Alibaba had single-day sales hit $14 billion. So, it's an unaudited number, but that is insane. $14 billion. Singles Day is the biggest shopping event in the world, larger than the United States. Black Friday and Cyber Monday combined. So, wow. So that's a Singles Day shopping festival. And bigger than we think Black Friday's nuts. So $14 billion in sales on one site in one day. And that's impressive. So I definitely think that's news headline worthy there. Going in and checking out what else we got going on. So I'm sure their stock's doing well. We got gold edging towards a 3-month low on the rate view. Again, talked about this a few times. You got dollar index easing after hitting that 7-month high. Spider Gold Trust falling on back down. Platinum falling on back down. Dollar gets more expensive or more valuable. Other things cost less. That also spilling on over into oil, along with the really high inventories that we have that continue to exceed the last 8 years. Oil moving on down, getting down to 42.90 today. So it was pretty flat until the report. And we had a little bit of volatility in the morning at 9:30. And then at the report, we were already down. Before the report came out, we were already down to 43.40. And that just continued. Actually, it was a little bit lower. It looks like before that report. We are right at about 43.20. And that just basically confirmed it, and it stayed on down. So there was a lot of people piling in with the expectation of that report pushing oil on down further. So really pushing down low. And hopefully put a little bit more money in your account for, holiday season here, saving some money on fuel. Looking on over at Reuters here, we got Wall Street moving slightly lower. It's energy and retail stocks sagging on down a little bit. Of course, I'm sure we're going to see those retail stocks pick on back up coming into our own Black Friday and Cyber Monday. And even though it may not be as big as Singles Day over there in China. But let's see, right now, they've been rebounding on back up. Like I was showing you, NASDAQ is just flying on back up and flew back from almost down 0.5 to up 0.5 right now, pushing right now on almost a deviation from high to low. And like I said, could be bouncing off that 0.5 deviation at this point. And if we go over and look at S&P, where it's at, it has broken through settlement and is a little bit higher right now. So market looks like it might want to continue on that trajectory and climb on up. I want to give you a wrap too, so I'm just trying to get Thinkorswim logged in. I got like 4 different versions on here, and some of them work, some of them don't. If I click the wrong button, it has some issues. Okay, so that gives us today's news events. But right now, like I said, just checking out NASDAQ. I mean, it's been a great long trade, flying up. And, getting a couple entry signals along the way right there, but really waiting for it to give us a potential pullback. Might get a nice potential short trade on it in the process. Volume much lower than expectations. If we look right down here on NASDAQ, on this massive move today, like we get this move right here on almost no volume at all. And so really low volume on a, pretty decent little drop. Continue to drop down with volume increasing as the market opened on up, but the market really has not been above expectations until just recently here in the last half hour have we actually exceeded the volume. So on that last push, and so that really leads me to think that we're probably moving towards a, especially getting the, we're getting morning volume, like opening volume right here around 12 o'clock, which is abnormal. So thinking that we're, probably looking for a pullback, a lot of take profits happening at this moment. So with that, what could we do? What kind of possibilities? Let's see. Let's look up a couple things. Maybe we can find a trade setup. It looks like it might be ready. So we're going to pull up Nadex and some spreads, and we'll see if we can find something. Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Alrighty, folks, going back here to the Diagnostic Trading Hour. And so we're still watching, looking at a potential setup here. We just need some confirmation on that. And looks like Dow might be our leading potential short. We're just watching to see if it all lines up. All right, so let's go ahead and look at where all the markets are at right now and get you caught up. We got the S&P is currently up a little over 2 points right now off of settlement. So as we can see right there, right here with the S&P, just right above settlement, we got the Russell is down 1.4 just below settlement, just bounced off of it pretty much to the tick there, and went up to 1186.9 and settlement at 1187. Looking on over at the Dow, Dow is up 29 points right now, so they're still pushing up. Like I said, waiting on that confirmation. And could actually give us a really good setup if we can get the right confirmation there. And 29 points right now, up 35 points, moving up. So Dow just continues to climb. And like I said, I'll sit back and just wait and be patient. Looking on over at the NASDAQ. NASDAQ right now is up 30 points on the day. So some big moves on up, sitting at 0.5 deviation right now. If we go in, we look at our energy sector. We got oil is currently down over $1. It's $1,000 move. So down $1.10 right now. Down to 43.12 at the moment. We got natural gas is currently down 0.011, And looking on over at our ag sector, corn is currently up 3.75, and we got soybeans is up 2.75 points right now. Looking over at the bond and dollar index, both in negative territory. So again, that's both bonds and dollar index in negative territory at the moment. Euro dollar climbing on up. A little bit of strength is up a whole 5 pips. We got the euro yen is down 15. Euro pound is down 22. So euro weaker against other currency pairs. Pound dollar stronger right now is actually doing better than the euro. Pound is up 79 pips. So nice move on pound, with pound yen up 66. U.S. yen heading on down, so dollar weaker against yen, down 23 pips right now. We got the Aussie yen is up 32. Aussie dollar is currently up 24 pips on the day, and dollar franc is down 15, with the dollar CAD down 9 pips on the day. All right, well, that gets you caught up with your lunchtime market wrap. Let's go ahead and we covered today's news stories. We got the rest of the news for the week all set up. And we got a couple trades we're looking for a potential pullback. So we had, some nice long runs here. They're actually still going, haven't been stopped out yet on the long side. And so, of course, those stops need to happen. We need to look for shorts to see a potential reversal to go the other direction on the trade. But just, always be ready, long, short, either way. And like I said, right now, markets are long. We'll see if we can get a setup before the show's out or not, but at least you'll know what to look for. Looking on over at some things we got here. What do we got? Need to go over implied volatility. Let's check out where our seasonality is on VIX at the moment. And TOS just changed something on their charts. Makes it very difficult to do. And I haven't quite figured out why they took away certain buttons. But somebody thought it was a good idea. Here we go. Let's go ahead and hop on over. We'll look at where the VIX is at the moment. And we can see it's been moving on down today. It had a little bit of a pop up there, that down move, but on back down. Sitting pretty low at 15. If we back on out, we look at a daily chart on this. If we go right over here, and on the daily chart, we can see it's moving on back down towards those lows of 11, 12, 13. It's going to make it harder. It's going to push prices further away from 50. Talking to a trader today, they're like, man, a lot of my trades that I used to do, I'd get those fills on a lot easier. And they're noticing lately they're not getting the fills that they were getting before. And again, that's because implied volatility has dropped significantly. And that does impact it. Again, pulls the price further away from 50. When implied volatility rises on a binary, the price gets closer to 50. And because the higher likelihood of movement, then the closer it is to a 50-50 chance the market moves up or down before expiration to be above or below a certain strike. So as we're seeing IV move down, that's not an abnormal thing. Let's go and let's look at our seasonality charts. One of my favorite features in Thinkorswim is they make that really easy to check on out. And so just look at a 5-year daily. You can see it's moving on down. We usually see it move on down into the end of the year. So we should see implied volatility continue to drop. It's actually a little lower than normal. We usually see it around 18 this time of year. And so if it continues to decline, we could easily move on back down to those 12s, which is what we've had this year. And again, that's where you're going to need to have, out of the money strategies you're taking advantage of. We're going to have, directional spread strategies you're taking advantage of. So you'll look at straddles and things of that sort that you can take advantage of because implied volatility is lower, less premium is in the contract. Okay, so that will give us, some insight, some clues into what you want to be looking for whenever you see this. And you can look at a variety of different volatility indices. Let's see what all ones Thinkorswim has in here. If we go in and we'll type in volatility. And we can see, if they have, there's gold, and there's, like I said, there's a lot of them out there. And let me show you, there's a site you can go to. It's a pretty cool, helpful tip. I've went over this before. But if we go on in, type in CBOE volatility index, and I'm not sure we want VIX, but that'll get us to the right spot over on CBOE.com. And we'll go down here to a variety of volatility indices. And let's see. I know they have a bunch of them. I'm just trying to find the page that they put them all on. But they got them for Amazon. They got them for Apple. They got them for Goldman. They have them for a lot of different contracts. They just recently added them for the euro as well. Just trying to see if I can find it easily. And we'll go, we'll just find it on here. It's on here, but it's on the CBOE's website. And if we go to their products and VIX index volatility, I don't want the VIX specifically. See if that'll get me any closer or not. Volatility indicators. So they got that on VIX, and they also have the VIX of the VIX, the VVIX. And you may or may not have used that. And let's see here. I know they have a bunch of them. Where are they putting them all at? And you got the VEN, the near-term VIX. So you can look at short-term VIX, long-term VIX, basically, which is short-term implied volatility, long-term implied volatility. Let's see here. And volatility indices. See if that brings us up anything. They made it a lot more difficult to find than they used to. It used to be really easy on their site. Okay, let's see here. They got SPX. I don't want the weekly. I don't want the end of month, quarterly. Let's see. I'll look it up. We'll find it together. And I'll bring it up. I may have to pull it up during the break and bring it back up for you. But they used to have it, like I said, it's right on the page. It was so much easier to find. Let's see. Gold volatility indice. I have a place I save them also. Oh, here we go. Volatility on ETFs. Okay, so they just sort of moved it all around. All right, so they got them on oil ETFs, the OVX. They got it on the gold, which is GVZ. So we can go over here and we can look these up. So that's what I was wanting to do. So that shows this crude oil volatility indice. So actually IV, is it rising? So it's a little bit higher than normal right now. So, but it usually stays pretty flat into the end of the year. And we go into, what about gold? So what does gold usually do this time of year? So gold is usually bouncing around. So it's pretty much doing what it normally does. It doesn't have near the smooth curve that we see on a bunch of the other ones. We have the, let's see, what would be another really interesting one to look up? The Euro currency one. That one started this year. They just launched it. So not a whole lot of data on it yet. But if we go in and look at it, it's really cool to see that you're actually seeing the Euro currency, the implied volatility is going higher. So that would actually cause a little more IV on, binaries on Euro-related pairs, or more implied volatility on spreads that would increase the premium as well on those. So we got GVZ for gold, we got OVX for oil ETF, we got a EVZ for the Euro currency ETF. Let's see here, we got emerging markets. So we can go and look at that one. And this is sort of what you see, the overall trend of what's happening with implied volatility compared to what normally happens with implied volatility. And so you can see right now, it's basically at a normal level, normal price, right about 23 on emerging markets. It was extremely high, as was pretty much everything. But it's coming back down, and usually it just flattens out on emerging markets, which means we don't see a massive rise or decline, usually in those markets at this time of year. Let's see, what other ones can we check out? We got silver, VXSLV. And these are things that are good to take a look at if you trade silver, if you trade gold, if you're trading oil, things like that, to just be aware of the volatility indice. I know I've seen a lot of people starting to trade the China 50 over on Nadex. And so if you are looking at that contract, then there is a China ETF volatility indice, the VXFXI. And so you can look at that and see, and obviously it was extremely high. It's dropped way down. It usually goes flat into the end of the year. We got gold miners. So if you're into the gold miner ETFs and you're trading the options on that, it'd be really good to be aware of the volatility indice on the gold miner ETFs themselves. So we go in, we look at VXGDX, and that's our gold miner ETF. And we can see we're higher than normal right now. On implied volatility, it has come down, but not near what its lows that it was back in June, and seems like it's trying to hold up there. So there's still quite a bit of implied volatility in that market. It actually usually rises going into the end of the year, so we may see an increase in gold volatility if seasonality continues to prove itself as accurate. We got the Brazilian ETF volatility indice. So this is showing you just a big variety of these exist for depending upon what markets you trade, whether you're a futures trader, forex trader, stock trader, ETF trader. Brazilian one's pretty spot on right there. You can see the correlation between again, this is the 5-year versus the daily, and seeing where we're at. And again, not a lot of increased implied volatility on most of these markets into the end of the year. We're usually seeing it drop or level off is the normal seasonality. So what that means is if you've been used to high implied volatility strategies, you are going to have to adapt your systems, your strategies going into the rest of the year. You're not going to have a whole lot of trades for the next 8 to 10 weeks because volatility usually goes pretty flat or down. So you have to have more than one club in your golf bag. If you're going to go out and you're going to trade like when you play golf, you don't just have an iron, you don't just have a driver, you don't just have a putter or a sand wedge. You have all of them for different conditions. And the conditions we're going into now are slower, smoother implied volatility, which isn't, in my opinion, near as much fun as all the volatility that happens whenever there's all the things happening in the news. But things are going to quiet down. People are going to stop making as much headlines. They're going to want to go home and be with their families. And it's just how it works. So you need to adapt your strategies, and this is also when I'll notice a lot of these little gurus pop up all over the place, and whenever there's a lot of volatility, especially in like August, September, is when you'll see a lot of that, and maybe a little bit in October, and then all of a sudden their whole system will just go bust. Like it was working for like the last month, and then they launched, and then it worked really well for the first month, and everybody thinks it's awesome, and then all of a sudden it goes completely down, and nobody has any idea why. It's because they've only traded for like 2 or 3 months. And they hopped on a Facebook page and started selling something. And people started buying it. But you need to understand that there are cycles in the market. There is seasonality in the market. And your systems have to be able to adjust that seasonality. Or you need to know when to turn certain systems on or off. One of my mentors taught me that when you have a system, that one of the things you do is you look at the equity curve. Like if it's making money or not, obviously. But he put like a moving average on the equity curve, on the profit of that system. And when obviously the equity curve was well above the moving average, then that meant like it was looking face on at you. So if you actually picture somebody looking straight at you, face to face, then that's the time to be using it. But as that starts dropping near or below, they start turning their head. So that person starts looking away from you. Then that's when that system is starting to die off. It doesn't mean it's dead. It just means this is not the season for it. So make sure you are adjustable. You can adjust to the markets or have a system that does adjust to the market. Stay right there. We'll be back right after this break.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new Market Safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so just doing a little thing, wrapping up different options out there and looking at everything. And one of the things I was talking about is volatility, implied volatility, how that impacts things. And, you know, I've seen people say at a lot of these different signal services where they talk about, you know, how wide the bid-ask spread is, or how the prices seem to be changing, or how the system just seemed to break, or the market, or they want to blame the platform, or, you know. But in reality, it's okay. So a day there maybe was some platform issues or whatever. But again, it's just seasonality. And seasonality impacts implied volatility on how the market's moving, and implied volatility impacts option pricing. And that's one reason why I point so many people to trade the near the market spreads on Nadex, because you don't have to deal with all the complexity of the options. But, you know, in higher volatility in markets, you're going to see bid offers widen up. Sometimes in lower, if there's not enough, as much trade volume, you may see it widen out. That's because the market maker has to cover and offset their risk. As that IV goes up, the price goes closer to 50. As that IV goes down, the price goes further away from 50. So it's not a, hey, this is really popular, or man, a lot of people are trading this, and so now it's just breaking and somebody's out to get us, and all these conspiracy theory things and everything else you hear out there. It's just how implied volatility impacts option pricing. And the sooner that's accepted, and this is really important, I think, the sooner you accept the reality that implied volatility has a massive impact on option pricing, the sooner you can stop blaming things that are out of your control, okay? And stop putting blame on the market maker or Nadex or the platform or whatever it is that you want to blame, and own up to the fact that implied volatility changes option pricing. And since it does, you have to change your system or have a system for a variety of implied volatility markets. When you own up to that fact, then you are able to find a solution so you can trade in that different market condition. But as long as you're blaming it on this, that, or the market maker, bid offers, or I'm going to quit because of this, that, then you're always going to be quitting. So you got to go, what can I impact? Well, I know IV is lower. Yeah, it's factual. There's no guessing. It's a fact. You can't dispute it. And yes, it does impact option pricing. It's one of the key number one components. It's the biggest impact. It's called Vega. Whenever you're looking at options, Vega is the highest impact of an option price that exists. It's more powerful than Delta and Theta and Gamma and Rho combined. So until you own up to it, you can't figure out how to best trade them in different market conditions. Okay? It's sort of like trying to blame the course whenever you're in the sandwich because you're using a driver instead of using a sandwich. Well, you're in the middle of the sand. It's not going to work as well. Okay? So you got to look at your conditions and see if what you're trying to use, the tool you're using, the system you're using, is made for those conditions. If someone tells you differently, if they try to blame it on a whole bunch of other things, bid offers and market makers and platforms and exchanges coming out to get you and all that, use a lot of caution. They just don't have a lot of experience, or they know either they don't have experience and they don't know they don't have experience, which is really scary because they don't know how to adjust to those markets and they're trying to give you ideas on how to trade. Or they do know that they don't know. They just are afraid. They want to make up some excuse as to why their stuff isn't working anymore. And so they're going to blame it on everything else except for they need to learn how to trade in that market if they're going to try to help you learn how to trade in that market. So, let that be an opportunity that, helps you set aside those who have been trading through the seasons versus those who have just traded for a few months or maybe a year. Okay? And, that will serve you well, pretty much in all trading, and as you look at education that's out there. I hope y'all have a fantastic day. I'll see you here tomorrow on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.